Hey everyone, this is June from Turning Point Life Investment. This is your weekly market analysis for the week ending in September 5th, 2009. So I'm going to jump straight into a 6-month daily view. Looking at the market, you can see we're at a pretty critical level right now. Now, the reason why I say that is because, when it comes to trading, there's this underlying theme, a very important theme actually behind support and resistance. When support gets broken, it most likely will get retested as resistance or new resistance, and vice versa. So last week I mentioned that 102 was a pretty good support level, right? Previous resistance right here got broken through and was acting as support last week. Now, this week, it actually comes back and gets retested as resistance. So you can see how this change in relationship keeps occurring around this 102 level. So the market closed right around that 102 level this week. And that's why I say it's at a pretty critical level because, well, if the market fails here at around 102, then that tells us that this was a successful retest and most likely we will get more selling to come for the market. However, if we manage to actually break above 102, then actually that could be a little more bullish because, well, we managed to break above resistance. Okay, so the buying is back into the market. So we really have to find out and wait till next week to see where people want to take this market. It's going to be a long weekend, so most likely that's when the big fund managers, the big boys, come back and start trading this market. So most likely we will get some kind of clue, some kind of idea next week as to where this market wants to go. If it wants to go lower, then you have to watch out for this support level right here. That's around 99, give or take. Okay, so a break underneath 99 will actually produce a lower low, and this will become a lower high. So lower lows and lower highs by definition is a downtrend. So that is something to watch out for that support level right there. However, if they want to take this market higher, most likely we will probably get a retest of this gap area. You can see here right around the 103 region. Okay, so, and of course the ultimate high right here around 104.35. Any break above that, we can retest the 105 level, which was a resistance back in October 2008. So again, just mind or keep an eye out for those levels, that support level, that resistance level, because that's going to be pretty critical, especially where the market is going to take off next week. So one interesting pattern you can see here is we have potentially a head and shoulders again in the formation. You can see a left shoulder head and potentially a right shoulder in the making. So if that is the case, then we got to watch out for this neckline to be broken right there. But we all learned from last time that not all head and shoulders are real. Okay, so it might get another fake out, who knows? But it's still worth to keep an eye on of a potential head and shoulders forming once again. Okay, next we go into the VIX. Looking at the VIX, this 24 level has been acting as pretty strong support, and it's managed to hold above support. But one thing I want to note is that we actually managed to get a higher high from the VIX. So that's bullish for the VIX, which translates to bearishness for the market. We had a couple of days of pretty strong selling for the VIX. If we get another bounce off of this 24 support level, then actually that might show us a little more activity, a little more volatility in the market. And as you know, increased volatility is usually not a good thing if you're bullish on the market. However, if we break underneath 24, then that might tell us there's less volatility and there's more bullishness back into the market. So again, the VIX is also at a pretty critical spot right now. Any bounce higher would be bearish for the market. A break underneath 24 would be bullish for the market. So again, going back into the market, I'm just going to zoom in again just to reiterate the strong significance of this 102 level. Previous support gets retested as a resistance right now. Looking at the hourly, this is the hourly view. Looking at the stochastic, we are overbought. So I wouldn't be surprised if 102 is going to struggle again next week just to work out this overbought. So I would say any break above 102 would be pretty bullish for the market. If it fails here, then that actually might be very bearish for the market. So just keep an eye out, see where the market's going to take us next week. It is going to be short, and it's only going to be 4 days of trading. So just watch for those levels.